I love this acronym, Batman. I can't help but to think about those movies, or when I was a kid watching cartoons and watching Batman. He was one of my favorites. So to get this Batman acronym is fantastic. And here you have it. What does Batman stand for? Broadcom, Apple, Tesla, Microsoft Meta, so two M's, Amazon Alphabet, two A's, and Nvidia. And we've had, as I said off top of the show, we had Fang, we have the Mag 7. How does this, uh, I guess, acronym differ from the ones of the past? And really, I would say it doesn't differ much at all, to be honest. It just, you added a few more names. We added a few more names. And why is that? Well, because of the success of a name like Broadcom. They came out with earnings, and their earnings were fantastic. Their outlook was fantastic, and they became the latest trillion-dollar company in the market, one of the largest companies in the world. So, of course, we have to add Broadcom to the mix. All the other names have pretty much been on our list in the past, just kind of mixed in a different way. But overall, this is a tech, this is a tech movement. This is about being in technology, being invested in big cap technology. That's really all that needs to be said. We have our first chart here, which shows the Batman stocks. And here you have them, right? This shows you how powerful and how big this group is. Market cap of Apple, as you can see there, the biggest, 3.68 trillion, followed closely behind by Nvidia and Microsoft, over 3 trillion as well. But then you have the 2 trillion club, Alphabet and Amazon, followed by the $1 trillion grouping, Meta, Tesla, and Broadcom, which is, as I said, new to the trillion-dollar party. So this tells me that if you're going to look at growing your wealth, these are the names I think you start with. And yes, they are all pretty much tech companies. You could make the argument about Tesla and Amazon, is it truly a tech name? But I think they can be looped into this group of tech. And for anybody that's saying, well, I'm just going to move away from technology, I think it's too high. Well, I think you're going to miss out on some significant gains even in 2025. We know that tech has led the way in 24 and 2023. I think it's going to have or play a big part in gains in 2025 as well. It may not be as large, or the gains may not be as great as we've seen in the past, perhaps due to high valuations. But this is the area of the economy that is growing and growing and growing. We're hearing from the likes of Nvidia that the growth just continues. Apple and names like Meta just growing fantastic numbers. And I don't think that's going to change. You can see here, earnings growth, Apple 19%, Nvidia 52% growth, and Tesla 37% growth. Unbelievable. You have some of the others like Alphabet and Amazon. When you look at it from a PEG ratio, keep in mind PEG ratio, price to earnings to growth. Obviously, the lower the ratio, the cheaper the stock. Nvidia on our list is the cheapest name, followed, I guess, by Broadcom, 1.3, Amazon. So even though Amazon trades at well over $200 a share, a lot of people would say Amazon is still fairly cheap based on certain metrics that you're looking at. Broadcom as well. Nvidia, when you take out on a forward earnings multiple basis, it's probably trading somewhere around 36 times 2026 earnings. So is that cheap? Well, the company is growing at 52% and your multiple is around 35, 36. Well, I would say that pretty much growth at a reasonable price. So for me, that's what I look at, as I've said many times, growth at a reasonable price. We have some charts of some of the names, some of our Batman names. First one being Broadcom. Our Broadcom chart here, look how well Broadcom has done. And that has actually happened right after Broadcom reported earnings. The market liked the earnings, came in roughly as expected, but their look ahead and the number that they put on their AI business was just astronomical, well above anybody thought. Broadcom, for anybody that is wondering, they do more customized chips versus NVIDIA. And in fact, when Broadcom surged, NVIDIA actually came down in the short term because some are looked upon Broadcom as a bit of a competitor to NVIDIA. Meta Platforms, formerly Facebook, our next chart. Facebook has just been an unbelievable stock. If you want to look at the far left, to the top right, yeah, there have been blips along the way for various reasons. But when you consider over 3 billion people, 3 billion people in the world today are on Meta platforms every day, on Meta apps, I should say, every day. And there's only what, 7.8, 8 billion in the world today. So you figure how many of those people don't have access to the internet? Maybe a few billion. And then what's left? Well, you figure maybe Facebook or Meta touches half the population that has internet access in the world every day. That's just an unbelievable stat. And then when you factor in all that they're doing with respect to AI, with respect to their advertising, and what they're doing with respect to Meta, with respect to their glasses. I actually have a pair of their Meta glasses right now, and a fantastic product. Their Meta Ray-Bans have artificial intelligence in them. All the different products that Meta's coming up with, unbelievable, unbelievable company to own shares of. Next chart is NVIDIA. NVIDIA here, you can see that the stock price has come down from about $152, which was its all-time high, but still just off. They had their conference recently. Jensen Huang, CEO, made some commentaries over the last couple of days about business going forward, and business really looks good with their new Blackwell chip, and even their former chips are still selling like hotcakes. Can't get enough of NVIDIA chips. Overall, I wanted to show our next chart is an overall view of the QQQ, or the tech ETF. And you can see, even if you're not in these names, if you're just in tech in general, tech has done extremely well. So the big large cap tech names, the Batman names, make up a very large component of the triple Qs, and a very large component of our next chart, which is the NASDAQ. So overall, when you're looking at what to invest in going forward, perhaps you want to look at Batman, the acronym Batman, and figure out what stocks in Batman. And there they are again. Are any of these companies worth owning? Are any of these companies cheap relative to their growth rates, their PEG ratio? I think that's important because, as I've said many times, I think if you're going to grow wealth, if you're going to grow your portfolio, even in this year, 2025, I think you need to have some technology as part of a diversified portfolio.